Hey everyone, Sterling here from Day Trading Forex Live. We're going to get into the Forex bank trading strategy. I'm going to try and make this video as brief as I can, but we've had a lot of feedback about this video, and people have been asking for a video that goes over, not just the text, but a video that actually goes over the strategy, visually shows what it looks like. So that's what I'm going to try and do here. And I'd like to get into the basis of this strategy, really the foundation of why I believe this strategy is the way to success in the Forex market, and my personal belief. And I do that based on the facts that, not just facts that I know, but the facts that probably everybody listening to this market knows. And one thing we know is that there's a 95% failure rate in this market. It's not a hidden fact. It's common knowledge to me, and it's common knowledge to you as well. And so that's one fact that we can build on. Now the next logical question we need to ask is, if all these traders are failing, and from 3 years of being in this market and 3 years of actually educating live in this market and dealing with well over 1,000 traders, I can tell you that that number is pretty accurate, if not a little bit low actually. And so if we know that failure rate, then we need to understand what they're using to fail in order to not repeat their mistakes. Again, as the saying goes, if you repeat the same thing, expect different results. That's the definition of insanity. And so I don't want to do that, and I hope that nobody listening to this wants to do that or continues to do that, as really most of us probably did in the beginning. I know myself, I just repeated what everybody else did before me. So a simple way to identify what everybody's doing is to go to Forex Factory or any other forum, identify what they're using, and if we're using something that the majority or the masses are using, we have to ask ourselves, why do we think that we're going to experience different results? Why do we think that we're going to be different than everybody else, and we're going to succeed with a strategy that everybody else fails with? And it's a question I had to ask myself, and it's a question that at the end of the day, everybody listening to this, you have to reason on it yourself. Don't let me tell you. Don't let anybody else tell you. Sit down and think about that. Give it some serious thought, because the reward in this market is huge. If you become successful, there's nothing better than becoming successful in the Forex market. It's a great market, a lot of perks. But in order to do that, we have to give it some serious thought. So I urge you to do that and reason on it yourself. Don't listen to me. Don't listen to anybody else. Take those points, reason on it, and come to your own conclusion. And that's exactly what the Forex bank trading strategy is all about. It's about the fact that this is not our market. The banks control this market. That's a well-known fact. So if they drive this market, we need to learn their strategy. We need to not try to fit our rules to a market that we don't control, but rather we need to learn their strategy. If we learn their strategy, if we learn when they're entering a position and what position they're entering, there's no other information we need to make a successful trade, and that is the foundation of the Forex bank trading strategy. So in this video, I'm going to go over 5 different screenshots of the setup, visually what it looked like, and we're going to break down the 3 phases in each one. Now to begin with, we're going to explain it a little more in depth, and we'll go a little bit faster. So first and foremost, in order for a bank to get into a position, they have to accumulate a position. They enter such a large amount that they can't just simply press buy or sell or spike the market. So they must accumulate over the course of time. This accumulation or entering of a position is often seen as a tight range-bound market, as you can see here. Following that accumulation, you often have a false push. In other words, they push the price opposite the direction they're ultimately going to drive it. Now, why do they do this? Well, during this accumulation period, number one, we don't know what they're accumulating. So when it comes to finally identifying what position they're accumulating, we need to see this manipulation. We need to see the manipulation because, and again, we got to think about what happens during this phase of manipulation. They drive the price up. What kind of orders does that trigger? Anybody that was short, expecting this resistance to hold, would be stopped out, have to buy it back. And additionally, there's also buy orders for anybody buying on the breakout. So you have, as the price goes above this resistance, it triggers all those buy orders. Again, for every seller there's a buyer, and for every buyer there's a seller. So again, if they're triggering all those buys, who's selling it to those buyers? Well, smart money's selling it to those buyers. So they push the price up above the resistance, trigger the buy orders, so they can sell into it and accumulate more of a position. So the accumulation is really just the manipulation is really just an extension of the accumulation, because during that manipulation they accumulate more of a position. So on that manipulation, that tells us what they're accumulating. Again, they drove it into those buy orders so they could sell into it. So if they accumulated a short position here or sold here, more than likely that means they were accumulating a short position here or selling through here. Now the ensuing price action really proved that, and that's visually how the three-step process breaks down. Is it always going to be this clear? No, it's not going to always be this clear. But I want to start out with visually what's the most clear, and as you become better and better, you can take a little more aggressive trades. So let's go on to the second chart. You can see here, not quite a horizontal move. It is a downward tight channel, but notice that the same general breakdown of accumulation is here, and that is a tight market. It doesn't matter whether it's slightly moving up, slightly moving down, or perfectly horizontal. It just matters that you have tight, stagnant, back and forth, range-bound, consolidating price action. Again, accumulation. We know that's accumulating, but we don't know what they're accumulating. This false push, or this push up that is rejected, tells us what they accumulated. They pushed the price up to trigger the buying so they can sell into it. It tells us they're accumulating a short position here. It pretty well by default means they were accumulating a short position here. The price moved to the downside. So after that manipulation candle closes, in this case manipulation bar closes, and it proves it was a manipulation candle, that's where the short should be taken. Now the third chart, a little bit different because it's a buy setup. Same thing though. You have accumulation, or that tight, stagnant, back and forth price action. You have a push down that has absolutely no follow through to it. This one doesn't get rejected immediately, but after these are all 15-minute charts, by the way. After a little bit, after about an hour, hour and a half, you can see it starts to get rejected. That proves itself as the false push, and the entry could have been taken anywhere through here. Over the next 2 days, it moved 385 pips. Again, same thing, accumulation, false push down that doesn't have any follow through, and that is followed by the market trend. If they push the price down, that's triggering any further selling, so they can buy into that selling, and then the price pushes up. Number 4, accumulation. The price pushes above the resistance is the manipulation. Then you have the market trend. This is during non-farm. To be honest, I missed this trade. You know, as a human, we still have some emotion in trading, and I don't care how long you've been trading. There's certain things that you'll say to yourself, okay, maybe I should stay out. And for me, the volatility right at this point was enough for me to stay out. And I did actually, just being honest, miss this trade. Going back to the first chart, I wanted to point this out. This was a trade that we actually did take in the room. We, I believe, lost 12 pips on this one initially. The market pushed up, looked like this was accumulation. It was going to start to run here. But actually that was just manipulation. I got faked out of that manipulation. But as soon as we recognize that, and this is the important part, usually a small loss can lead to a very large profit. If you identify that you got faked out of the manipulation, and you logically conclude that if that was a manipulation, then you know what? I need to exit this position, take a small loss. I believe I took a 12-pip loss, and I rode this thing down for another 60, 70 pips and made a very, very nice profit on it. And that's really the key to the strategy, is it allows you to take, you know, small loss here and there, but then identify where and what smart money was doing and take the bigger run. All right, let's go back to the fifth and final chart again. Tight, stagnant, range-bound price action, which is the identifying mark of accumulation. More accumulation here. Very clear false push up that is immediately rejected. Therefore, again, we know if they drove the price up, they were driving it into buy orders to trigger those buy orders so they could sell into it. And the ensuing price action, again, as it always does, proved that to be true. This is a strategy that the banks use day in, day out. It does not change. It will not change because it cannot change. They have to accumulate positions over the course of time. That will never change. They will always take out stops because it allows them to accumulate more of a position and at a better price. It's not a hidden thing in this market. Manipulation and stop taking is something that is clearly admitted by by many people trading. You can look up Jim Cramer. He clearly identifies it, and actually a video I believe we link to on the site very clearly details how he used to do this. Manipulation is a fact of life. It's a fact in the Forex market as well. and it's sad that it's not talked about. Hopefully this video opens your guys' eyes to the fact that the banks do manipulate, number one, and they do have a strategy that we can follow. This is what we must learn to follow. Now there's a lot more information on the site. Again, the site is www.daytradingforexlive.com. You can go to the site, you can check out all the other information. There's a lot more videos and articles that detail the strategy. I truly hope it helps you in your own trading. And again, guys, go back to what we said at the beginning. Think about it yourself. Draw your own conclusion from the facts presented. And hopefully, you begin to see things from a little different light and start to recognize that what we need to be learning is what the banks are doing. And so until next time, guys, I wish you all the best and happy trading.